Well, hello everyone. Tyler Ford here, Tucson, Arizona with eXp Realty, and welcome to Living in Tucson, your Tucson real estate connection, and this month's Tucson monthly home inventory update, where each and every month we dive on into the MLS and we take a look at home inventory levels. And in my opinion, home inventory levels are the leading indicator, supply and demand, economics 101. And over the last couple of years, we've had a massive reduction in inventory and a huge demand in supply, which has driven appreciation rates up double digits year over year over the last couple of years. But things are definitely starting to change. It's now shifting to a more buyer-friendly market. And so what I'm going to do, I'm going to keep it short and sweet, and we're going to log into the MLS and take a look at what inventory levels are doing. I'm going to put it on a spreadsheet so you can get a visual of what's going on, and we'll jump on in. But the first thing that I want to start with is a little bit of news. What is driving this market and definitely starting to slow down? And the biggest news that we've had this week is the Fed's increased rates by 75 basis points. So I'm going to share my screen right here, and let's see here. So I'm going to share my screen, and this is a chart of what's going on with interest rates. And again, the Feds did raise rates this week, which does have an impact on mortgage rates. And right now on a 30-year fixed, we're sitting at 6.29, and on a 15-year, we're at 5.44. But if you look back, and we're going to go look back to a longer view, rates right now are sitting at where we were around 2007, 2008. So we have not seen interest rates at these levels in a long time. And relative, if you look at this chart, interest rates are still fairly good. But the challenge that a lot of people are having right now with home values going up the way they've done over the last couple of years, and we've seen a 50% appreciation rate, it's now starting to price people out of the market, because when interest rates go up, home affordability goes way down. And what happens from a mortgage standpoint, when you apply for a home loan, they look at what is called your debt to income ratio, and it's your income in relationship to debt. And the mortgage payment is included in your DTI. And as interest rates move up, it reduces the amount that you can be approved for. So one of two things need to happen. Either you put more money down in order to get your debt to income ratio in line, and or home values come down, or you buy a less expensive home. So again, rates are as high as they've been since 2007, 2008. And that's what's really, in my opinion, putting the brakes on this market. So I think we're to the point now where the Feds will kind of chill out here and hopefully not continue to raise rates. But the other thing they're working on doing is also curbing inflation with all the things going up. So that's the big news. And with that, what I'd like to do is I'm gonna jump on over to the MLS. So right now I am logged into the MLS. And we're going to take a look at home inventory levels. And then I'm going to jump over to an Excel spreadsheet and we'll put those numbers in. I did it this morning, might be a little bit different. So we'll update with the new numbers based on what we find. So the first thing we're going to look at is single family homes in Tucson. And when I do that, if you look right here, right now in the MLS, all of Tucson for single family homes, there's 1,549 single family homes listed in the MLS. And if we go to townhomes, in all of Tucson, there are 129 townhomes listed in the MLS. And again, you can see that right there. If we go to condos, there's 116 active listings in the MLS for condos. And for manufactured homes, we are looking at 90 manufactured homes. So what I'm going to do now is I'm going to pull up an Excel spreadsheet. And let me make it so you can. So now I'm going to pull up an Excel spreadsheet and we're going to plug those numbers in. So this morning when I did it, 1,547. When I just pulled it up, it's 1,549. Manufactured homes, 90. So it changed by one. Condos, 116. That's the same. And then townhomes, 127. When I just did it was 129. So right now in the MLS, all of Tucson, we've got 1,755 active listings. And when I did this last month, we are up 243 active listings in the MLS from month to month. And if you look at this, so last year, I just kind of started to feel that this market was going to shift. And I wanted to track inventory because when the Tucson Association puts out the Tucson housing market report each and every month, they don't, you can, I mean, you can visually do it, but there's nothing that really tracks it. And I wanted to track it just to see how we were tracking from month to month. So I started this Excel spreadsheet. And when I started doing this almost a little over a year ago, we are up 54% year over year in terms of inventory. And then from month to month, right now, we saw a 13.85% increase from month to month. And here's where it gets interesting. So this is the visual of the chart. And when I started to track it, then it dipped, and now it's starting to go back up in a big, big way. But that dip that you see is kind of a seasonality trend within Tucson. So as our weather cools off, but again, it was a totally different market. So that's what the graph looks like. The next thing I want to go over is look at this from a little bit bigger picture. So when I'm pulling up all the listings in the MLS in Tucson, we're just getting Tucson and not the surrounding areas. But if we look at Zillow, we get Tucson and the surrounding areas, which gives us the percentages are about the same, but this kind of gives you a bigger picture look outside of just Tucson. So if you go to Zillow and you type in Tucson, Arizona, right now there are 2,151 active listings in Tucson and the surrounding areas. And then the other, which is right here, that's 260. That is FSBOs, for sale by owners, people that have their properties listed on Zillow that aren't listed in the MLS. Jump back over to an Excel spreadsheet. And this is my Zillow info. So 21, that I did this morning, 2151. And then other for sale by owners, 2060. So from month to month on Zillow tracking this, we went up 252 listings, which is a change of 12.44%. The other thing that I want to show you is the median home sales price in Tucson. So each and every month, TAR puts out the housing market report, and I'll show you where to get that in a little bit, but it's worth diving into if you want to geek out on the numbers. I like to really look at the numbers and crunch them and really follow this market. But in September, the median home sales price for single family homes was 375,000. The previous month, it was 385,000. So it was a decrease. It's the first month we've seen a decrease. So from month to month, the median home sales price went down 2.67%. And if you look at the appreciation rates in 2021, just on single family homes, if you combined everything in terms of appreciation rates in Tucson, it was double digits if you look at townhomes, condos, but this is specifically single family homes. Last year, we had an appreciation rate of 16.88%. And so year to date, we are at 6.67%. But if you look at it, the appreciation came in the first from January to May, June. So really in the first 5 to 6 months, and we've been going sideways since. And so my take on this market in terms of appreciation, we're going to go back to more of a normal market in terms of, on average, homes appreciate anywhere from 4 to maybe 8%, 10% on a good year. And in my opinion, we're going to see a slowdown and a pullback, but more back to a normal market in regards to appreciation rates. And if you look at the chart here, this is the median home sales price for single family homes. And again, you can see over the last year since I started tracking this, it's been crazy, but we're now going sideways and even a pullback, and we're definitely starting to see a more buyer friendly market. And one thing that I forgot to mention, if you've got any questions or comments at the end, I'm going to go on into those and answer some questions to the best of my ability. So if you got any questions or comments, go ahead and comment, and I'd love to answer those questions. The other thing I want to show you. So if you really want to geek out on the numbers, if you go to Tucson Homes and Lots, and if you scroll down the page and click on the Tucson monthly market update, each and every month I do a recap on the housing market, and you can go ahead and watch the video. And then if you really, really want to dive into the numbers, if you click on this link right here, it actually pulls up the full report from TAR. And it's really good information, but I would encourage you, again, if you want to dive into the numbers and keep up on what's going on each and every month, just go to Tucson Homes and Lots and pull that up, and you can get access to it. So with that, I am going to dive into some questions. So again, if you've got any questions, go ahead and comment, and then we will wrap this up. So let's see here. This is the first question. Richard asks, what percentage of listings have had price cuts? What percentage have withdrawn from the MLS without a sale? Richard, that's a good question. I don't want to give you wrong information. I don't have the exact data. There has been a lot of price reductions. The one thing I can say, when it comes to either agents or somebody looking, the mistake that a lot of agents are making right now, and even buyers looking at this market, you only want to look at comps from 30, 60, maybe 90 days back. But the mistake that I'm seeing is people, when they're running comps too far back, which is giving people the average dollar per square foot is going to be inflated. Average days on market is going to be wrong. So again, I can dig a little bit deeper, but I don't have that data. I'd have to start tracking it. But again, I know that there's been a ton of price reductions, and it's what I call the California suckerfish days are gone in terms of, May or January through May. I mean, people were chasing the top end of the market. And then as the market started to shift, sellers were still hanging on to those older comps. And so the price reductions are now coming because agents are showing people more realistic comps in terms of going 30, 60, maybe 90 days back. And then as a result, people are starting to reduce price. So great question. Appreciate you asking it. The next question, Jay. Hey, Jay. Jay asked, with cooler weather coming and snowbirds set to arrive here in Tucson, what do you think is going to impact? And another great question. That chart that I showed you, that little dip, is the seasonality of Tucson. And typically, in Tucson, when the weather cools off in October through April, is the biggest demand for the Tucson housing market. So the question is, in this change of the market, will the winter visitors stabilize the inventory levels, or are they going to sit on the sidelines and just wait? So, great question. I wish I had the crystal ball, but typically it does help, and there's more demand. So, if you're a seller out there, it's a great time to get your home ready to sell and sell, in my opinion. So, great question, Jay, and I appreciate it. Let me see what else, see if I missed anything else here. So that wraps it up. I like to keep it short and sweet. And each and every month, I dive on into the Tucson housing market. And again, I feel it's the leading indicator. So I appreciate you watching. And if you have any questions or comments, this is a live on YouTube. After the live video, you can go ahead and comment below, and love to get back to you. So, going to wrap it up. In the meantime, make it a great day.